welcome to TheoTrade. This is Don Kaufman. January 6, 2021. Absolute political chaos reigns large inside of the marketplace. Let's actually get to work and kind of break down a little bit of some of the action that I see. But, I'm actually going to start this evening's video in one of the more unlikely of places, and that is displaying volatility. And again, most of you are probably aware of some of the chaos on the political front going on right now. But what we actually saw inside of trade today, again, from a volatility point of view, markets explode to the upside initially on some of the news coming out of Georgia. At the same time as the market exploded to the upside, the Nasdaq was really weak relative, the Russell just on fire. But again, one of the more unlikely places to actually kick this off and to show you how extreme some of the movement happened to be is none other than the VIX. Coming into the early portions of today, again, you have the volatility rather in an elevated stance. It gets crushed back with a rally in the marketplace and just lights it up into the last literally like 2 hours of trade today. And this is something to keep very, very close eyes on to see that the S&Ps, and again, you have to kind of look at, first of all, the range inside of the volatility is huge, but to kind of gather this, right, the volatility was elevated because we didn't have the results out of the Georgia, runoffs. All right, so it's one of the reasons volatility was elevated, neither here nor there. The moment that information is out, volatility effectively dropped, which it did, but then we exploded back onto the scene. And again, the big takeaway out of this, and this is why I'm actually covering it first, your volatility, all right, ended relatively flat today. Yeah, at the same time, the S&Ps are actually up about 0.75%. It is an incredibly unusual situation where, again, the volatility at this point, you have to look at the ramifications of volatility rallying back, much more serious than the Georgia runoff. All right. So again, volatility, even though you're like, it closed down today. Yeah, the volatility closed down, but the S&P is up some 27, and that just does not exactly leave a warm, fuzzy place in my heart. The other aspect that you really want to look at, this has a lot to do with professional hedging. They actually crushed the VVIX all the way back down to 111, only to take it back up all the way to the 124 handle. It actually closed at 120. Again, these are some extraordinary moves in a very, very short period of time. Now, we could spend all day trying to break down some of the different moves inside of the sectors, but it's neither here nor there. I mean, yes, we could look at the financials, exploded to the upside, which quite frankly doesn't make a whole lot of sense because, all right, in the Georgia runoffs, it actually looks, again, like the Democrats are going to have full control of both the House, the Senate, obviously the administration, which could imply more regulations towards some of the big banks. Doesn't seem to matter at this point, right? The banks explode to the upside. This is actually a move counterintuitive. That's because whatever you might think, all right, about, the runoff, whatever you might think politically, it all comes down to what actually happened inside of the bond market today. So the two largest moves inside of the marketplace, unequivocally, volatility. Volatility looms large because volatility says, if you think this is something, just wait. The remainder of this week is going to be just as wild, if not more wild. All right, the bond move. The bond move is being done on just some absolutely magnificent volume. This you can look at as what we kind of call a reflation trade. And when a reflation trade happens, the bonds sell off big, The steepening of literally the curve in terms of interest rates. I don't want to go too deeply into that, but I do want you to see TNX, and TNX is the 10-year. The 10-year, which actually came up around this 0.96. This was, again, trapped inside of a really tight range for a period of time, explodes up over, again, 1%. This is something I've actually mentioned quite considerably. So you can call this a reflation trade. You can call it whatever you want. Interest rates explode back up. I look at this vastly different. I look at this in terms of, the marketplace may actually see not what I would call a reflation trade, but the market may actually see inflation, massive inflation coming. So to get ahead of massive inflation, what do? You raise interest rates. Interest rates automatically shot to the upside. When interest rates shot to the upside, what I'm calling not the reflation trade, but I'm actually calling it the inflation trade, when interest rates actually shot to the upside, Guess what? The beneficiary happened to be none other than the financials. They may face more regulations, doesn't matter, right? They've actually got interest rates off the floor and off the mat. And that, again, the interest rates actually flying higher, again, ironically takes financials higher, this has been one of the objects of my infection is the financials. We expected the exact opposite. The financials would actually contract back down to the 2650 level. So this actually flies in the face of, again, of anticipation, or at least my anticipation of trades. I am actually short the financials. So I took heat inside of the financials. Nevertheless, I'm also short a lot of technology, which played out beautifully. Okay. You would think actually with what's going on politically that some of your tech companies would be like, beautiful. These things are going to do great. They actually got tagged hard today. The monsters of tech got hit by the tune of almost 2.5%. Again, we're talking statistically significant levels. And then you actually have to look at the energy sector. The energy sector being the beneficiary of what? Again, when we start to talk about this like inflation type trade, this inflationary trade, the energy sector actually benefited from it. It's the exact opposite, okay, of what even skilled traders would have anticipated. So again, to kind of recap a couple of aspects, because, if you're looking forward to this marketplace, when I say looking forward, you're trying to ascertain what's going on over here. Forget for a second. I'm serious about this. Forget about your directional bias. I think you have to check whatever your bias happens to be. I think you have to check it at the door. Okay. Everything just got thrown out of the window. And that's why I started off with, political chaos is in the marketplace. And this is not something that's going to go away overnight. So check your directional bias at the door. What do we have to go off of at this point? I'll tell you exactly what we have to go off of. This is actually the starting place for the week. This is about $90 higher. This is about $90 lower. Coming in, okay, to Thursday and Friday, people, you have to anticipate that we're going to either touch or crack through the upper or lower expected move. Okay, again, this is far, far from over. Look at the sheer magnitude of the move inside of today's trade. Now, if you want to look at this again on an intraday basis, be my guest, but there isn't a directional bias. There isn't a directional feel. All we actually have right now are bonds that just got crushed to the downside. We have volatility. And even though volatility, again, I want to reiterate this, it ended down on the day, but you can't look at it that way. It's actually right back up to where it was before, again, some of the Georgia election numbers came out, which technically implies that volatility is actually elevated, right? If you want to look at volatility skew, and this is where we actually look at the volatility futures. Volatility futures are right back in a stance to where, again, short-term volatility and longer-term volatility, the vol skew is completely and totally flat. In fact, it actually goes into a little bit of an inversion in some of the back months, which still implies that there is more risk in the here and now than there is in the future, which is, again, it's a very, very dangerous proposition. Everything you're seeing unfold on the screen right now. So, lo and behold, what you want to do in this circumstance is you kind of want to handicap, like, what is your total and aggregated risk versus the capability of the marketplace. We can easily move up $90 or down $90. That's just Thursday and Friday. Okay. And that's one of the things you want to get a grip on. The other thing you want to look at is if you're heavily into the Nasdaq positions. Listen, the Nasdaq, it really took it on the chin today by the tune of 1.4%. But people, it was way off some of the overnight lows. If we actually look at the Nasdaq future, this thing could extend considerably lower than that. When you look at the QQQ, also apply what we call auto expected moves. You got to be aware that the Qs actually closed right on the lower edge of their expected move. So we're almost to the point of a complete and total breakdown inside of the Nasdaq. On the flip side of that, okay, when you start to look at what? None other than the Russell exploded through the upper edge of its expected move. Okay, if this trade is to actually, again, continue, what will likely play out, and if you look at this and you want to be really objective with it, if we start to see, okay, tech get hit any harder than it currently has, and again, this is the trade to kind of watch. If tech gets hit any harder, breaks outside the expected move, what it's likely going to do is cause, okay, a high correlation coefficient, and it could actually spark sell-side activity specific to the financials. Again, as I said, I'm on the wrong side of the financial position. What I am on the right side of is the fact that I'm also short some of the tech stocks out there. Nevertheless, if tech continues to sell off, it's very likely to actually flip the financials over. One last aspect I want you to kind of be privy to before I let you go on there. Again, political chaos reigns large. the bonds. If the bonds continue to see sell-side activity, initially sell-side activity is a wonderful thing for the financials, okay? Nevertheless, if the bonds continue to sell off in such a violent manner, it'll actually spin the entire marketplace. Initially, the knee-jerk reaction is that interest rates are higher, and interest rates are higher is wonderful for the financials. But if interest rates keep going up, it'll absolutely tank the entire economy. One of the last charts I'll actually show you is the XHB. This is the home builders. Does it make much sense that the home builders are rallying? Again, home builders are rallying in a rising interest rate environment. That's why I'm telling you right now, watch these bonds very carefully. That is trade, people. That is going to drive the S&Ps. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.